Well, come on then, folks. We head into European trade on Tuesday, the 16th of January. Now, we'll have a look across markets and see what is going on today, what's up, what's down, on a pretty negative start to the day. Martin Luther King Jr. Day yesterday. So holiday throughout the US, so pretty thin trading conditions over the course of yesterday. Today, obviously, it's Tuesday, but it kind of becomes the Monday of the week. A little bit of a negative start yesterday. Start to the week yesterday, but it didn't really made too much. It's a pretty thin trade. Into this morning is a pretty negative start to trade this morning, which we'll have a look at once we get over to the grid. But market's putting that down to rates, outlook, jitters. Now, if you go back to a couple of our videos on the first week of the year, not last week, the week before, looking at the back end of last year and kind of looking ahead to the start of this year, I was saying that markets the Fed had communicated to us back on the 13th of December 0.75% worth of cuts through to year end this year, and markets just took that and ran with it and then started to price in double that, 1.5% worth of cuts, and basically started to price in a cut at every single meeting over the course of this year, which was completely not what the Fed said. They said they were going to reduce interest rates gradually, 25 basis points, 25 over the course of a number of meetings through to the end of 2024. The markets were like, oh, rate cuts, let's go crazy, and then just price rate cut at every single meeting this year. And it's no surprise that the Fed have come out and pushed back on that. Hawkish remarks from central bankers tempered expectations. They kind of want to communicate to markets that the markets have overcooked it. They've priced in way too much. You need to kind of price out a bit, and then if things change a little bit later on in the year, maybe the economy enters a recession, gets a little bit worse than market people anticipate, then you can cut rates a bit more. But certainly for now, to be cutting rates at every single meeting this year is a bit kind of far-fetched and a bit over the top, to be perfectly honest with you. I know fairly difficult to believe of kind of what they've done over the last 3 years, but ultimately I don't think they're that wrong in terms of being wrong by half. But again, they've been extremely wrong before, and they will probably be extremely wrong again. So markets have kind of wound back, if that makes sense, the prospects of rate cuts into this year, and kind of dialed that back a little bit. What happens then off the back of that is you get downside in stocks. Obviously, rate cuts are positive for stocks. So if you have to price out rate cuts, then stocks obviously sell off the back of that. Rate cuts are negative for a currency. If you price out rate cuts, it is then positive for a currency. And you see month to date percentage change, year to date percentage change. Obviously year to date and month to date are going to be the same in the month of January, but pretty positive when it comes to the dollar. The dollar is higher across the board over the course of this month. Stocks are lower across the board over the course of this month. The Russell especially nearly down 5% this month so far. That is kind of dragging into European equities as well. ECB officials suggesting that we might not even get a rate cut this year, to not bank on rate cuts in 2024, which is a bit insane. But some market participants think the European economy is already in a recession due to the economic data that we're getting. If the Eurozone is in a recession, they will cut interest rates. You can be pretty sure of that. So I think you can bet on interest rates at some point, or interest rate cuts at some point this year. But certainly officials from the ECB suggesting not to, which is US central bank officials over the last couple of weeks pushing back on the prospect of rate cuts. ECB officials pushing back on the prospect of rate cuts. Downside in US equities, downside in European equities, upside in the dollar. Euro a little bit strong off the back of that, but it's down against the US dollar, down against the Japanese yen. So Japanese yen strengthening a little bit off the back of some safe haven flows. Interesting moves because yields are higher in today's trade so far, plus the Japanese yen higher, which is not something you often see. So the Japanese yen clearly working as a bit of a safe haven in this morning's session, which is interesting. Just genuine risk off trading over the Asian session. Does that continue when we head into the European and US sessions later on today? Certainly this US kind of first proper session of the week. I'll have to see when it gets to that, but certainly a negative start to the week. That Japanese yen strength, though, is something to keep an eye on as we head into more liquid trade a little bit later on. Unemployment rate from the UK, as you can see, 4.2% in line with previous, in line with consensus. Doesn't really give us much one way or the other. Their average earnings, though, down slightly, which is not a good thing. Employment change slightly higher, but ultimately the unemployment rate, big hitter out there, and that is bang in line with consensus and bang in line with previous. It doesn't really give us too much to go off in terms of the price of sterling. Inflation from Germany, bang in line with consensus. Again, doesn't offer us much one way or the other. I got some inflation figures out of Canada a little bit later on. Canada have not completely closed the door in terms of rate hikes. They're not seemingly talking about rate cuts. Obviously, reason being is that inflation is expected to accelerate over the month of December. You can see previous 3.1%, consensus 3.4%. If that comes in above 3.4%, it should be a pretty good opportunity to buy the Canadian dollar. If it comes in less than 3.4%, it's probably a situation where trade is maybe a little bit sticky. Month over month figure though over December, minus 0.3% consensus. So obviously inflation in December of last year was not great, but again, figures to keep an eye on. That comes in above consensus and on those three, with the central bank not completely shutting the door on interest rate hikes, plus not really talking about interest rate cuts too much. That is something certainly worth keeping an eye on as you get around to it a little bit later on. You can see US dollar strength though across the board. Your Aussie, Kiwi, Euro and Sterling all selling off. Not much in Euro and Sterling yesterday, but through today, or through the lows today in today's Asian session, you can see dollar Swiss, dollar CAD, dollar yen all pushing higher. US dollar strength across the board. You can see a bit of downside in the S&P 500, the Dow Jones, the Nasdaq and the Russell. The DAX, the Euro stocks and the FTSE all follow suit as well, or US stocks probably follow suit from yesterday in Europe. So now interesting moves to start the week. Again, not much aggression, but now the way this is shaping up with US dollar strength, equity weakness, I set the tone for the rest of the week. Bond yields slightly higher, certainly the 2-year yield probably to be expected. Off kind of a heavy sell-off into the end of last week, and sort of for a while now. 2-year yield's been trending lower, 10-year yield also been trending lower. I think the trend is still pretty firmly down in them for the moment, which again, yields pushing lower and the US dollar pushing higher. It's not really a combination of things that you would normally see, but it's kind of what we're getting at the moment. Oil bit all over the place. Talk about Middle Eastern tensions when it's up. Talk about lack of demand when it's down. Again, it's not really doing much. Certainly over the course of this year, it's just hacked sideways in a pretty large range, a pretty volatile range, but still not much to see there. Certainly from a longer term perspective. Apart from that, Bitcoin post SEC announcement that we spoke about last week hasn't really done much, has it? Gold had a bit of a pop higher. You can see back end of last week off the back of yields pushing lower, but start this week not much has gone on. So this page isn't showing us much, but certainly equities downside across the board, US dollar upside across the board. Look for things to then keep that going. You look, Christopher Waller has a speech later on at 4:00. Whenever he talks, he does have some sort of influence over the Fed, so something to keep an eye on at 4:00. Canadian inflation, main focus of attention today. No high impact economic data from the US until we get retail sales tomorrow, so nothing to kick the US dollar further into gear. Certainly in terms of the calendar, we'll keep an eye on how the US open up a little bit later on. But Canadian inflation, something to keep an eye on, 130 today. But as markets are shaping up at the moment, US dollar strength, equities weakness, is probably the side of the fence you've got to sit on.